Hey, how is everybody doing? Hope you are well. You're watching Bull Boom Bear Bust. My name is JJ. It is Friday. It is July 14th, 2023. Back with another dose of economic reality. As usual, a lot of news to get into. The economy continues to implode. It depends on who you ask. If you ask members of the top 10%, they're going to tell you that the economy's booming, everything's fine. There are some people in denial still that do not admit what's really happening for most people. And it's funny that some of the people that disagree with me, most of them are not doing very well at all. One person keeps emailing me. Come to find out, he lives at home with his parents. He has a lot of debt, student loan debt. Doesn't really own much, right? No investments, no savings, but yet the economy's good because he goes out and sees people shopping at the mall, so therefore everybody's rich to him. So I must be wrong because people are swiping credit cards at the mall. Anyways, I've talked about that guy. He emails me at least twice a week, so I have to bring him up. I go through all your emails, by the way. If I haven't responded, I am behind. But this particular guy emails me so much. Anyways, let's get into some numbers here. We've got a lot of good news, bad news, in-between news. Here's some bad news. Homelessness spikes. Homelessness is up 37% just since 2020, or beginning of 2021 rather. 37% nationwide. New York, it's up over 66%. Chicago up 82%. How are you homeless in New York or Chicago? How do you survive? Those places are freezing. Hopefully they have enough shelters. But all these vacant buildings now, they should just open up the vacant buildings, all these commercial buildings, and just let free reign. Let the homeless people go in there. Can you imagine how dangerous that would be, and how much of a war zone that would be in those buildings if you just opened it up to all the homeless people? But that may create a lot of new jobs because you would have to have a lot of security in there, and probably a 1-to-1 ratio for every homeless person. You'd have to have some security guy in there to make sure things didn't get out of hand. Anyways, according to some people, this is good news. A spike in homelessness means the economy's doing good because nobody can afford rent. Hardly anyone can afford the cost of buying a home. So surge in homelessness, no surprise, but there's people out there telling me that that's a good sign, I guess. That's a good thing to see. Some other cities real quick on the percentage increase year over year. Homeless, we've got Boston coming in 17%, Washington, D.C. 30%, San Jose 36%, that's California, Houston, Texas 25%, Fort Worth, Texas 55%, wow. Even Texas not immune to it. Home prices went up a lot in Texas, rents went up a lot in Texas, probably all these people moving from California, and now Texas and Florida, they're seeing the same problems we saw here in California. Homelessness, things aren't affordable. It's crazy. All right, let's talk about the markets, the stock markets today. The indexes were mixed at the closing here on Friday, July 14th. The Dow Jones was in the green slightly. The other three indexes in the red. But I expect further upside in the stock market unless we have some sort of blackout event or something like that. With the war situation. But it's been a big week. The debt ceiling has been completely suspended, not just increased, but suspended. That means they can run up as much debt as they want to. There's no limit. So I wouldn't be shocked if these markets now went to all-time highs. And I've always said that things could change just like that. And this suspension of the debt ceiling, it's not something that's happened very often in my research. I actually haven't seen an instance where the debt ceiling was completely suspended like it is now. So we're in uncharted waters, and it's really no surprise. It shouldn't be a shocker to anybody that they're looking for unlimited spending capabilities to keep this whole house of cards from caving in, from collapsing. But with all the spending that's going to happen because the debt ceiling has been suspended or eliminated, there's going to be consequences, right? So we're going to see the dollar continue to weaken. In fact, we did see a pretty big drop in the dollar. This is out of investing here. Dollar collapses, stocks and gold shine after inflation data. Well, inflation's still going up, just at a slower pace, and that's another thing that some people think is good news. It's really not good news. If prices are too high and homelessness is surging, people can't afford rent and they can't afford their homes, Is it good that prices are still going up even though it's going up at a slower pace? I guess it could be worse, right, if you want to look at the numbers like that. The US dollar, though, down compared to all of the other major currencies in the past 24 hours here. This actually came out yesterday. Anyways, the dollar is not looking so good right here. I don't think the dollar is going to go away anytime soon. Well, it depends on what you call soon. It's not going to go away, this year. And it may take years, and I hope it does. I hope it is a slow motion collapse, unless you're all in on precious metals, gold and silver, or something like that. Then you don't want to see the dollar vanish right away, because most people are still holding dollars in some manner, in some form. But I've always said here, hedge against this, bet against the debt, invest accordingly. Even if you're not an investor, it doesn't hurt to hold. It doesn't hurt to hold a small percentage of your wealth in precious metals, and I prefer silver myself. Now, when the next report comes out on consumer debt, I think we're going to see another record leap. Here's one example. People went shopping. Yeah, my chair's still broke. You guys hear that? Actually, I just got my new one delivered today. So every once in a while you hear this noise. My tilt function broke on my chair, so I have to lean all the way back unless I'm up against the bookshelf here. So it's kind of weird. But I'll get the new chair in here and you won't hear that annoying popping noise. Anyways, record Prime Day sales. For those of you that didn't know, I think it was Wednesday and Thursday, or was it Tuesday and Wednesday? Doesn't matter. They had 2 days of supposed good deals on Amazon Prime items, and that meant lower prices. Well, not always. I read a couple articles that said all they did was raise the original price and then put a red mark through it and then put in the sales price to make it look like it was on sale. But then if you looked at that same item before the sale, it was still the same price. So there was some shenanigans going on there. I'm sure there was some good deals here and there, but there was also some shenanigans going on from what I read for some users of Amazon. Alright, let's talk about foreclosures. Foreclosures are up 13% in the first half of 2023, and it's going to get worse, yes. This is just the start, and it's likely these people that bought at the peak of the bubble, and prices aren't down very much, but when you're so over leveraged into a home, it doesn't take much of a price decline to put you in big trouble. When you can't even take out one home equity line of credit because you bought right at the top and now the home is already worth less than you paid for it, even though it's only a year or two afterwards, you can't even refinance. You can't. You wouldn't want to refinance now with the rates. But remember, when rates were going lower, were low and going lower, they were dropping. People were refinancing, doing cash out refis, and with home equity going up, they were allowed to borrow more and roll that over into a new 30-year loan and still be able to afford the payments. Now that lifeline is gone, and we're seeing the effects of it with foreclosures. We also see the job losses and layoffs starting to take effect here. The number is up 13% now year over year. Compared to the first half of 2022, what's it going to be by the end of this year? Is it going to be up 20%? Is it going to be up 30%? Is it going to be up 50%? We'll have to see. Will they do another mortgage forbearance where no one can get their home foreclosed? If that's the case, then you're going to see home prices go up even more, right? So, will the policymakers inflate the bubble more? Will they let it crash? Will they let it deflate? We'll have to see. It's fun to sit here and try to say what's going to happen, to try to make predictions, but this is all in the hands of the policymakers. There's a lot of people out there that said that prices would collapse in 2020. I think we're one of the only channels that told you that no, they're not going to let that happen. Do you think the politicians in an election year back then were going to let the housing market collapse and take down the rest of the economy with it? I was one of the only ones to say that. And I'm telling you right now that just because prices are declining now doesn't mean they're going to continue to decline. They could throw a monkey wrench in this market and pop it back up. Right? They could completely manipulate this by just passing a few laws, more forbearances. They could do it on the car market, the auto market, where no one can get their cars repossessed. It's completely crazy and insane. But that's what happens when you have people out there choosing the direction of the economy, putting interest rates where they think they should be at, picking the winners and the losers. Speaking of picking the winners and losers, here's an example. Student loan debt. We're going to see $39 billion of student loans get erased. Now that may seem like a lot, but it's actually not, because the total student loan debt is close to $1.8 trillion. That's trillion with a T. So 39 billion is just making a small dent in the total student loan debt. So who gets to pick the winners and the losers? Who gets to pick who gets the money, who gets their loans forgiven, and who doesn't? Well, it could be just a few $1,000 off of everybody's. That's why it doesn't equal very much. We'll have to see how they do this. There it goes again. But the point is that they get to pick the winners and the losers. How do you gauge where the economy is going when you have it all engineered and the direction of the economy is in the hands of a few people, right? So very tricky times, folks. Continue to stack, the routine. Bet against the debt. And we'll look for opportunities. Car prices are starting to come down. Actually, electric vehicle prices took the biggest drop. I think people are starting to wake up and smell the coffee. Tesla did have some major price cuts. That's a big part of it. They're really getting rid of that inventory. I think a lot of people are going to be afraid to have an electric car here in the next few years because so much power grid instability and strain. We're seeing warnings out here in California already not to use so much electricity. Different parts of the state, not yet here in San Diego yet, but it's happening, folks. So buckle up and brace and be ready for anything. We're going to wrap it up. Big love. Thanks everybody for being here. Thank you for your support. Keep stacking. Bye for now. Peace.